With climate change threatening crops everywhere, hurricanes, droughts, and floods are happening more frequently. You can't afford to ignore the protection that federal crop insurance offers. But how do you get it? Today, I'm going to walk you through exactly how to secure your farm's financial future and ensure you're covered when disaster strikes. In this video, we'll break down why federal crop insurance is essential, what options you have, and most importantly, a step-by-step guide to applying that you can start today. No more confusion, no more waiting. Why crop insurance is critical right now. Climate change risks. The weather is changing and it's affecting farmers like never before. Unpredictable weather patterns and extreme events are becoming more common, and they're devastating. But the good news is, you can protect yourself. The financial impact. Without crop insurance, a natural disaster could wipe out your entire year's worth of hard work. Crop insurance helps ensure that you're not left financially stranded. The types of federal crop insurance you can get. Revenue protection. Revenue protection is one of the most popular types. It covers losses due to both yield shortfalls and price drops, meaning you won't lose income even if the market tanks or the weather takes a turn. Actual production history, APH. APH plans are based on the historical production of your farm. If your yield is below average for some reason, you're covered. Other options for specialized crops. There are also specific policies if you're growing unique crops, like fruit or specialty grains. These can offer tailored coverage for your needs. The real step-by-step guide to applying for federal crop insurance. Step 1. Understand what you're up against. Before looking into applications, assess the risk factors your farm faces. Are you in an area prone to droughts or floods? Knowing your risks will help you choose the right coverage. Tip: don't just guess. If you're unsure about your farm's risk profile, there are free online tools and resources that provide risk assessments. Step 2. Find the right plan for you and do your own research. Now that you know your risks, it's time to look at the policies. The USDA offers a range of options, and you'll need to compare these plans based on your crop types and location. Pro tip: use the USDA's online tool to get an idea of what coverage is best for your farm. This tool can give you estimates based on your location, making the process much easier. Step 3. Gather your farm's records. The next thing you'll need is accurate records. This includes your farm's production history, yields, and any other data relevant to your crops. This helps the insurance company assess the risk and price your policy accordingly. Tip: if you don't have detailed records, now is the time to start keeping them. Crop insurance depends on precise data, and the more organized you are, the better. Step 4. Apply online. No need to visit an office. You don't need to visit any offices for this. The application process is online, and you can complete most of it through the USDA's Risk Management Agency RMA website. Step 5. Double-check the deadlines. One of the most important parts of the application process is the deadline. Miss it and you might not be covered for the season. The deadline is usually March 15th for most crops, so mark that on your calendar now. Tip: get reminders from the RMA website or set alerts on your phone to make sure you don't miss it. Pro tips for a smooth application. Once you're covered, don't assume it's done. Review your insurance policy annually to make sure it's still a good fit for your farm's changing needs. If you have any questions or need help navigating the process, leave a comment below, and I'll personally help you out. And if you found this video helpful, hit the like button, share it with other farmers, and subscribe for more tips on protecting your farm.